This is C3.ai, and on the monthly chart, you can see how price bottomed out, and we did have this leg up in 2023 thanks to NVIDIA and ChatGPT, but since price hit this weekly sellers level at say $51, and since price attempted to continue to try to move higher after this leg down, price has been in a steady decline downward. So stay tuned. I'm going to give you my target. I do think price is going to continue to go down. But before we do that, I just want to go over this article. It is coming from the Motley Fool. C3.ai stock fell 40% in just 7 weeks. Time to buy the dip? And the answer is no. Again, I'm going to give you my price target in a couple of moments. At the beginning of 2023, few people would have accurately predicted how C3.ai stock was going to perform this year. After booking a year-to-date rise of more than 300% at one point, it trended in the other direction. Since early August, it has dropped by about 40%. After summer, when the stock looked overvalued, the AI stock has dipped to more reasonable levels. Considering the world's continued focus on AI, has that decline made C3.ai a buy, or should investors still avoid this stock? So if you don't know, C3.ai specializes in AI-powered enterprise software for clients in a variety of industries. Its top customers is the U.S. Department of Defense, which accounted for 67% of the total bookings in the company's fiscal 2024 first quarter. Shell and Bank of America are some of its other prominent clients. Nevertheless, one might wonder whether the AI in the company's name was the biggest factor in its recent stock rally. Investors seem increasingly aware that its revenue growth has lagged that of its peer despite its role in the AI industry. For fiscal Q1, its revenues increased by a comparatively modest 11% year over year to 72.4 million. Also, the company lost 64 million in the fiscal Q1. That was a slight improvement from its 72 million loss in the prior year quarter, but that result was arguably not enough to sustain the stock's gains from the first half of the calendar year. The company also forecasted a non-GAAP loss from operations of between 70 million to 100 million. That indicates that the GAAP profitability is not likely for the foreseeable future. Valuation-wise, it sells at a price-to-sales ratio of 11, well below its peak ratio of 85 in December of 2020. Nevertheless, C3.ai began 2023 with a price-to-sales ratio of 4, and with no end in sight to the losses, investors might think twice about paying the current sales multiple, even after the pullback. So what do? In the wake of its considerably retracement, investors should probably stay on the sidelines. Yes, the company's AI-driven software and client base would indicate significant growth potential, and the price of the stock has fallen significantly from its 52-week peak. However, the market was likely overvaluing the AI stock when the share price was growing faster than NVIDIA's. Even with a slight improvement in revenue growth, C3.ai has not come close to matching its growth rates of fiscal 2022. Given the revenue growth in the low double-digit percentages and the losses that will likely persist into the foreseeable future, C3.ai business does not appear to justify its current sales multiple. Now, kind of going back to the charts, I did a video a couple of weeks ago, and so this pullback and impulse move down was definitely analysis from the last video. Again, back in May, a daily bias level at 27 was established. However, you got to remember, the price at that point from August to now has been in a down decline, and so price did react twice, back in August 18th and then back in August 23rd. Again, that was just the pullback though. We had a gap down, basing, and now we see the next leg down. Probably equally important, in addition to breaching and closing below the daily bias level at $27, price is now below the 200-day moving average, which serves as a secular line in the sand for the bears and the bulls. Now, as promised, what is my target? Let's go to the weekly chart, and you see these wicks that are pointing down. Got a couple more that was established back in May. This level represents buyers, right? Rally. If you look on a smaller time frame, there's some buyers here. But nevertheless, my target is $16. Why 16? Well, that was support back in May of last year. Served that support again in May of this year. And again, just scrolling down to the daily chart. You had a weak rally in price, basing candles, and then a rally higher. I won't call that a level of interest, but I will call 16 as support and the floor and the target from current levels, currently at 24.51. Thanks for watching. Subscribe. Please like the video.